I'm Steve. It's Sunday, March 29th, 2026. Now, today we're not just looking at the market, we're looking at a battlefield. An invisible war is being fought right now for the future of money itself.
You know, while most of the market's got its eyes glued to stocks and bonds, the real conflict, the one that's going to define this entire generation, it's not being fought on some physical battlefield. No, this is a fight for control, for the digital rails of the whole global economy.
$39 trillion. That's the U.S. national debt right now. A staggering number. But while America is busy wrestling with its own balance sheet, the central bankers over in Frankfurt, they're laser-focused on a much more immediate threat. It's something they're calling financial colonization.
So let's be absolutely clear here. This war, it isn't about tanks or missiles. It's about transactions. It's about Europe finally waking up and realizing, perhaps a little too late, that it has completely lost control of its own payment infrastructure.
And the reality of it is, well, it's stark. Just look at this. Two-thirds of all card payments made inside Europe are processed by companies that aren't even European. We're talking about the American giants, Visa, MasterCard. For the folks at the European Central Bank, this isn't some minor market share problem. No, this is a critical loss of economic sovereignty.
So when you hear that the ECB launched its live pilots of the digital euro this month, don't think for a second this was some proactive leap into the future. This is not about them chasing the next big thing in technology. No, this is a defensive move. It's a strategic move. Plain and simple, it's about survival.
So what was the trigger? What pushed them to make such a big defensive move? Well, it was the stablecoin siege, this rapid rise of digital assets, specifically the ones pegged to currencies from outside the Eurozone.
And here's the core of the conflict, right here. On one side, you have the euro. That's the ECB's primary tool for managing economic stability. On the other side, you have these US dollar-backed stablecoins. Think USDC, Tether. Now, if Europeans start widely adopting these digital dollars, well, the ECB loses its main lever of control. It's that simple. It means they can't set interest rates that actually matter anymore.
And look, this isn't just my analysis. This is a direct warning from the European Central Bank itself, issued this very month. They see a future, a very near future, where the Federal Reserve's decisions over in Washington have a more direct impact on the streets of Paris and Berlin than their own decisions in Frankfurt.
At the end of the day, it all boils down to one fundamental question. Who controls the currency? Because whoever answers that question, that's who holds the real power.
So, how is Europe responding to all this? Well, they're building a fortress, a digital one. And the keystone holding this entire defense together is the digital euro itself.
Now let's be perfectly clear about what we're talking about here. The digital euro is not another speculative crypto asset. It's sovereign money. It's a direct liability of the central bank, specifically designed to be a public alternative. You can think of it as a new European rail for a European economy.
But they've had to engineer this thing very, very carefully. See, to prevent a huge crisis, one where citizens just pull all their money out of commercial banks at once, they're putting in something called holding limits. It's an absolutely critical feature. It's designed to keep the entire banking system from collapsing.
And the rumored limit? It's sitting at about 3,000 euros. This just reinforces what this thing is for. It is engineered for daily payments, for buying coffee, for groceries. It's not a tool for your large-scale savings. That's what could destabilize the private banks.
All right, so the digital euro is the fortress wall, but that's not their only weapon. The second part of this whole strategy is regulatory. It's a legal shield, designed to defend the perimeter.
And here's how their MiCA regulation, that's the Markets in Crypto Assets framework, works as a weapon. It's simple, really. First, they monitor the volume of these foreign stablecoins. Then, they detect when a certain threshold is crossed, let's say 1 million transactions a day in the Eurozone. And if that happens, they restrict. The ECB has the full legal authority to step in and just halt its issuance. They can pull the plug.
What this really represents is a clear, unambiguous strategic choice. Europe is basically telling the Goliaths of Silicon Valley and the crypto world that access to its massive market, well, it's not an unconditional right. They are prioritizing their monetary sovereignty, their control, over the ideal of some completely open, borderless market.
And as we're talking right now, the S&P 500 sits at 6740. So while the day-to-day markets just churn away, this tectonic shift in the very foundations of global finance is happening right under our noses. Believe me,
This geopolitical maneuvering is going to have consequences for capital flows for years, maybe decades to come.
So, Europe's financial fortress, it's being built. The walls are going up, the rules are being written. But the real question, the one that matters, is can it hold? The internal pressures are immense. And remember, those post-pandemic recovery funds, they run out in 2027. That creates a fiscal cliff that is going to test the euro's foundations like never before. The war for the ledger has only just begun. If you want to know who's winning, watch the volume of those foreign stablecoins. That's the data that'll tell the story. This is Steve. Stay on the right side of the ledger.